Wanted to put together a video, stock options for beginners. The reason why, I got a phone call from one of my guys on Saturday, and he'd been struggling with trying to do a specific strategy. He's seen, I don't know how many videos, stock options for beginners, and he knows that I'm very methodical and very mathematical oriented, and he wanted to better understand stock options for beginners. So I laid out the reasons why his stock options are expiring worthless and why he's not making money trading stock options. What's going on? Bottom line is simply this: expectations management. His expectations on a daily basis are far too high for stock options. And this is one of the big sort of things that stock options for beginners fail to really kind of grasp. The stock market itself doesn't really move nearly as much as people hope. Everybody who buys a stock option is thinking that this is it. They can now pick out the color of their Lambo. But the reality is quite different. And if you take away that sort of hope and start looking at things methodically, you can profit as someone who's trading stock options, especially if you're looking at it from the stock options for beginners perspective. Moneyball. Look at it from that perspective. They're not swinging for the fences every single time. They're trying to get on base. And if you take that approach, stock options is actually a lot more profitable. There are a few other aspects I want to kind of break down in this video, stock options for beginners, so that someone can understand what expectations they could see, and from that, how to profit on stock options. Let's jump in and I want to show you a few things. Want to start off showing you something that I look at on a regular basis. Now, I'm not going to break down. This is a bell curve or a normal distribution. I studied economics. I also studied statistics. Because of that, this is sort of where I kind of gravitate toward on a regular basis. The high and the low. What is the range of SPX? And if you're trading, say, stock options on SPY stock, what is the high and the low, the range on a regular basis? This is one of the things that's really kind of critical. Most people think that every single day the market's going to shoot to the moon. That's simply not true from a statistical standpoint. So on the weekend, I looked at SPY stock, options on SPY stock. Reference was about 520.6. 521 calls were trading at about $1.50, 520 puts at about $1.23. Now this would be 1 day to expiration, or 1 DTE. $2.60 if you were to have purchased that stock option. And now the reference that I'm pulling off is from today. $2.60 if you bought both the puts and the calls today. Now you need a move in SPY stock of at least $2.62 to see profits, to break even. Now, as the market moves closer to, say, 522, 523, your 521 calls may not necessarily, because of Delta and some of the other Greeks, may not necessarily move one for one at first. But what I wanted to kind of break down, this is the high-low range, and if you look at the very, very bottom, 0.828, that is the range on from the high and the low over the course of the past 100 days. So if you are trading stock options, this is one of the first things you're going to want to understand is during a given period of time, the most recent given period of time, what's the average price movement? And here I took the high and low, did some subtraction, and then I took the average. Plain and simple, easy spreadsheet to put together. 0.82% is the average. So if you bought the put and the call at the close the day before, you need at least 0.828 in order for this option to break even. Now, bust out your calculator. 0.00828 times 520. It's about 425, 450. What is that? That's the range, however, from the high to the low. The markets never, typically, it does happen from time to time, open up and then move in one direction, say 0.828%. This is the high-low range. So for anybody to step in and say, I'm going to buy at the low and sell at the high, and I'm a genius. Well, you're more than that. You're the luckiest human being walking, probably, because there's everybody who's involved in the markets is doing exactly the same thing. There are two other statistics that are so important for stock options for beginners traders. One of them is when the market moves or when the market opens up, there's a range from the open to the high and the open to the low. The range is half of the range between, say, the high and the low total. When the market opens, on average, 0.43 is the move from the open to the high. Okay? If you are trading stock options and you did pay those prices for stock options, the 521 calls and the 520 puts, you would need a move and you'd need to get 100% of that move, the 0.43%, to break even. Basically, you would not make money. This is one of the most important keys for trading stock options, especially stock options for beginners. Expectations management. If when the market opens up, there's only less than 0.5% from the open to the high and less than 0.5% from the open to the low, you don't really necessarily on a regular basis have the ability to pick that low and sell at that high on a regular basis using stock options if you bought those puts and calls the night before. There is something you can do. Now here's another range that's really important to me. The high to the close and the low to the close, or the close to the low. Again, these are numbers, especially over the past 100 days. The close is only 0.38%, a third of a percent away from the high, which is an interesting statistic. And then the low range is about 0.5%. So typically with stocks, SPX, and stock options, this is how you want to kind of approach it, that we typically see moves moving higher and higher and higher on a regular basis. And at the close, on average, is above the open. But I wanted to kind of break something else down. And this is this morning when the market first opened, I looked at the market itself right at the open. Now the $2.20 for the overnight 521, 520 call and 520 put was about 220, 230. The market doesn't move enough on a regular enough basis for you to be profitable if you bought both a put and a call. Instead, however, what I noticed was, and I sent a message to my guy this morning, as soon as the market opened up this morning, puts and calls at the money, the 521, 520, 521 call, 520 put, we're trading about 75 cents, which means you only need $1.50, which is about 75 cents less than, or about 30% less than, an option from the night before. Now, when you bust out your calculator, this becomes a far more profitable probability. Fact is, if we took a look at the numbers from today, let's take a look at this is SPY stock, what happened today. And right at the very top there, that was the open for the morning. If you were fortunate enough to buy a put and a call at the market in the morning and paid 75 cents for each, you would pay $1.50. The market opened up this morning. Now it closed on Friday significantly lower. And as it turns out, today's close was roughly about the same as Friday's close as well. We had some overnight Sunday night movement where the stock price moved higher, but had you bought that put and call at the market this morning within the first 3 minutes of trading, you paid $1.50. The market was trading at 522.60, which your break-even point on that particular stock option spread was 521.10. Well, the low was well below 520.20. As a matter of fact, it dropped through 520. It's difficult to get out of the market at that point, because at that point, once the market starts moving like it is, psychology takes over and you think it's going to keep going and my Lambo is going to be blue, white, whatever. And then the market starts moving back up. That if you systematically mechanize your trading and saying, you know what, if I spend $1.50, I want 50 cents in profit. If you did that on today's move, that breakdown, your stock options, you would have pulled out an easy $50 off of one trade buying the 520, what would it be, about 522.50 calls and puts. What I want to do is do a series on stock options for beginners, breaking down SPX, SPY stock, showing on a daily basis over the next several days, because I'm going to help my guy out get a little better at understanding some of these stock options. Now on Wednesday, we get CPI data. CPI data is going to move the market. More than likely, those stock options are going to be much richer than the price movement we saw today. They could easily go for $2 for both a put and call, meaning you need a $4 move on SPY stock just to break even. That might not work out because the market doesn't necessarily move as much as people hope. That's one of the key things when it comes to stock options for beginners, is getting rid of the hope and playing Moneyball. That if you took a more mechanized approach to stock options, you have a higher probability of success. And if you take out the color of your Lambo and instead look for Moneyball, get the base hit every single day, a base hit, then you can start picking out colors of cars. I'm going to break down stock options for beginners video series. I'll try and push something out on a regular basis over the next couple days just to see how this plays out. I'm going to continue to do this strategy and explain it so that anybody who is looking for stock options for beginners videos, this will pop up and maybe they can get a better chance at understanding expectations management and understanding that the stock market itself doesn't really move nearly as much as people hope. Make sure to hit that like and follow button. We'll see you in the next video.